All right, hey group, it is Wes with Pikes Peak Trades and spurred on by some fans and a really critical time right now in market structure and in just current news that's going on out there. Thought I would get out a video and give you some comprehensive looks at the things that I'm looking at, both from the longer term perspective and also some immediate things that I think could happen early this coming week here. So trading is just finished March 10th. 2023. We've got 3 weeks left of trading in March, and we are looking here at the SPX quarterly. So the quarterly candle will close at the end of this month, and what we're looking at right now is not good. So from the highest time frames, we're seeing here a potential gravestone doji that closed Friday under that crucial 8 EMA. And this is my marker. This is really what I'm looking at here to give me the evidence that I need, whether or not I should be sticking around in this market for the longer term. I'm talking about my personal family investments. And if we do in fact close with this kind of candle in March, probability says you need to really take care and really look out for your assets, because we're starting to see multiple quarterly candles under that 8 EMA. That's exactly what happened in the worst bear legs that we've happened in secular bears, in the dot-com bust, and also in the GFC. So with the Silicon Valley Bank news failure coming out, right now there's a lot of uncertainty out there. And I can't say that what happened in that GFC won't happen again. It is possible we see that contagion. So in the worst case scenarios, I think we're looking at something that's looking a lot like 2001 and 2008, the summer months in both of those. And so we've got to be on guard. Okay, now at the same time, we get something that could spark recovery through the end of the month. We close back above that key level. 3,900 is going to give you a really easy number to remember. And then I think probability suggests that maybe we actually did get a significant low. It'd be a cyclical bear here, a primary degree low, not part of a cycle bear. That's what we're looking at here in the bigger term picture. Okay, now as we pare down smaller time frames, things are not looking good again. Here's your monthly, and I've got that 34 EMA marked at 38.77. It's near that quarterly 8 EMA. We don't want to see that candle close there. We start getting quarterly, monthly, then weekly bearishness stacking up. Here we are below right now, the flattening. This is the 50-week SMA. I could put some other EMAs on there, but right now we're just at this mid channel of what I think could be a 0.618 or 0.786 fib off of a potential double higher low coming off of our October bear market low, but it's tenuous. Certainly, if we break below this 200 week, if that all joins together with weakness through the end of March and we start moving below this 200 week, I got to back you up into just this part of the GFC. It's starting to look right in there. I said summer of '08, and that's what we're looking at right here. Okay, so we're at a critical market juncture. I really do think the next 3 weeks for longer term decision making, I think, are essential. You got to keep this on the radar. At the same time, it's extremely exciting. Maybe we do have a key floor here in the market, but we've just got to let things play out. Okay, now let me get into some really possibly significantly oversold short-term conditions. So I love this combination, this trio here of NYMO, of VIX, and the SPX. And we had 3 key things trigger what I think could be an extremely oversold condition that would at least give us a quick snapback rally. We had NYMO below its lower BB. we had the VIX on an interesting upper wicking candle above its upper BB and the SPX below. We also had the NASDAQ composite below its lower BB. The Dow was below its lower BB. IWM well below it. And you get conditions like this, and it's very possible if there's also any kind of good news that comes out that we're not looking at financial contagion, we could see a huge springing back. So the recipe is there for recovery through March along this. But, and I've been saying this to those in my small Discord group, when things like this fail, that's when you know you can be very bearish. And we did see a failure on NYMO below this zero line. And that historically has led to some of the worst continuation of oversold market crashes. So we do really just have to be aware that this might not play out, but in some disclosure here, I took a chance on some extreme fear in the markets on Friday. I bought the close. I didn't throw the whole farm or, mortgage the house, so to speak, on it. But I thought it was worth the possibility that we could get a bounce. Now, we need a follow-through condition of 2 days. So Monday on the VIX back inside the BB, and then a close below that. And that's one of the best signals out there I know, that we just had kind of a knee-jerk oversold selling reaction. It would likely have to coincide with some kind of good news, maybe a bank buyout, maybe Fed intervention, maybe emergency action by the Fed, a pausing, or man, who knows? Could we even at this point rule out an emergency rate cut? All of these things are on the table. When you get into these extreme situations, I think we've just got to be ready for anything. Now, if we do get the quick snapback, so let me just show you, and I've been posting this onto daily charts, that the Qs are in much better shape. I'm going to show you a couple ideas on SPX, but what we've got here with the Qs is a potential double higher low. Okay, now we did lose both the 50 and the 200 SMAs. We can't stay below both of those for long, but I want you to notice we're only here within pennies of getting a golden cross on that. So could all of this be setting up here for an extremely surprising 3 of 3? I am not one to say that I'm smart enough to rule it out. Now, on the other side of the ledger, did we just have a nested bear, a 1-2 to a 1-2? In that case, I've got some nasty targets for big tech down below. We would rapidly see this fib level. Let me add the 0.618 on there internally so you've got that marker. If 280 fails and this potential channel fails, it's not looking good at all. So we've got to stay balanced. But we've got that potential here so far of just 3 waves down. Now, let me get that into the SPX. I think that 3 waves is a little more pronounced. And we know that counter trend corrections in Elliott wave structure themselves into 3 waves. And we also know that the C leg, so the second selling leg, the third and final leg of that correction, is often violent, especially when you're looking here at a wave 2. So this to me is still holding a bullish pattern of a double higher low, but we cannot see many more days of closing price action below here, that key 200 SMA. Bulls have to spring out of that, recover it, and have to continue to keep this multi-week golden cross in action. And that recovery is what could spring that wave 3 of 3. I haven't fibbed out the bearish side of this, but you could just project a 1 down into a 2. We'd be in a 3 of 3. We would quickly lose the December lows if the bullish count is wrong. And then undoubtedly, we're heading towards most likely 3,000 or below in the worst case contagion scenarios in the financial system. Okay, one more thing that I did want to show. I'm watching Bitcoin here this weekend. And Bitcoin, I think, is in its first higher low off of its bear from November, right in a bullish golden fib zone. So let's see what transpires with crypto throughout the rest of this weekend. You can see my longer term count here that we set a significant cycle low, either a 4, which I have right now, or an even more bullish 2 if this slides over. And the timing of any bullish projection here is just really speculative. But within this channel, is it possible that over the next 2 years, we see an extremely surprising move here in crypto? So I'm paying attention to that. Could get you down here into the daily. I'm watching kind of this volume POC. I'm watching this 200-day hold. Now, you saw it on SPXQQQ. It lost it. We haven't lost it here on Bitcoin. So I'm wondering if maybe there's still a little bit of sensation that we could have some risk on even into Monday. But then again, we lose that quickly and lose this internal fib. And things, I think, are looking much, much worse for us at the start of the week. Okay, so I think just a really exciting and incredibly interesting place to be. Let me take you back to that quarterly chart here on the SPX, because you've got that 3,900 roughly level on the 8 EMA, and that's my marker. And I won't be fooling around here. The positions that I've been building long in the market since late last year, if we fail below that on an ugly looking gravestone doji by the end of this month, I will be out of this market. And if it throws a head fake and I'm wrong, no biggie. The quarter recovers by June and I simply get back in. But if I'm right, it's the potential that I've saved myself here, maybe 1,000 plus SPX points to the downside. And that's protection of my assets and capital that I just think shows some wisdom in handling. Okay, so we're in for exciting weeks ahead to finish the month. I don't know what's going to happen, but what I do know is I know what I'm looking for either way. Okay, so thanks for the follows and likes. It's been fun interacting. I feel the engagements on Twitter have gotten better. Maybe that's just because of heightened interest in what's going on. You know me, I'm always a glass half full guy, and I'm always going to be that way. It's a choice I think you have to make every day and every week that you're alive. And until that market tells me otherwise, you're still going to see me keep counts like this on the charts. If I'm wrong, I'm going to be quick to admit it. I'm not going to stubbornly hang on to something that then moves into lower probability. So for right now, let's see what we've got coming up in these next few weeks. Undoubtedly, get your popcorn. It is going to be exciting.